So I'm Tyron, as Taylor mentioned. I'm with Aris Mining, and we're hoping to be the next million-ounce producer. We think the gold space has a vacuum of growth, and we intend to fill that void. So I'll try and rush through here and keep it to 15 minutes. So I will make some forward-looking statements. Please check out our website for all of our technical disclosure. Oops. So I use this slide to kind of break down the DNA of the company. And so there are 4 pillars to our strategy here. The first is that we have a lot of production growth, and we can do that from our existing asset base. We don't need to go and take geological risk. We have 4 assets. Each on its own is capable of doing around 200,000 ounces a year. Assets like those are rare. We have 4 of them. So we are a growth company. In a market like this, access to capital markets can be challenging. It can force you to dilute and suck up a lot of shareholder value. We're in a very fortunate situation in that we have over $200 million in cash. We have a bunch of project financing totaling $260 million, and we're generating significant EBITDA at our existing asset base. We also are a proven team. So our chair, Ian Talfer, founded Goldcorp as a $20 million shell. At its peak, Goldcorp had a $50 billion market cap that was a buy and build strategy. Our CEO, Neil, did that at Endeavour Mining. He did it again at Leagold. So we know this model works, and we've got experienced leadership at the helm. And then finally, the 4th pillar is that we don't control the gold price. I think everyone in this room believes that gold is going higher long term. However, while you're waiting for that gold window, if you're becoming a 2-asset company from a 1-asset company, if you're growing from 200,000 ounces to 400,000 ounces without issuing a new share, we believe that your stock will go up even if the gold price is flat. The company has been very active since its formation just 2 years ago. We've done 3 deals. We've gone from a single asset developer to a producer with a bunch of growth on the horizon. We've had a lot of success in Colombia picking up assets, permitting assets, and I think the fact that we moved so quickly means we've been able to stay under the radar. I need to touch on artisanal small mining partnerships in Colombia. An interesting stat that we got from the government is that about 85% of the gold in Colombia is mined informally. Those are ounces that don't pay taxes. And what's interesting is their traditional processing methodology gets about 45–50% gold recoveries. Okay? At our Segovia mill, for example, we're getting 95% plus recovery. So there's a huge margin there that we can share with our partners and use to increase our production. So I have to give credit to our predecessor company, GCM. They rolled this program out at Segovia. We now have 68 partnerships with artisanal mining groups. That covers 3,000 people. These are 3,000 individuals that now have a bank account. They're paying taxes. They can go and get credit from the bank. And about 40% of our production is coming from these artisanal small miner partnerships. So it's just the way you have to do business in Colombia. And we intend to leverage this program at our other assets at Marmato and Soton Norte and use it to tap the mineral wealth in Colombia. So this is kind of a snapshot of our company. As you can see, we're focused on Colombia. We have 2 producing mines, Segovia and Marmato. Those are both high-grade deposits. And then we have 2 development projects, Soton Norte and Toro Peru, 1 in Colombia and then 1 in Guyana. We've been steadily producing around 230,000 ounces for the last while, and we intend to grow that to 400,000 ounces when we bring Marmato lower online. And as you can see, we have a very large reserve and resource inventory. So while we have a lot of exploration potential, we don't need to take geologic risk. And I think that's important if you're a generalist. You don't want to take too much technical risk for when that gold window finally arrives. So this is an overview of Segovia. This is our flagship mine. We have a central processing facility that's rated for 2,000 tons a day. The mine's been there for over a century. It's very high grade, and this is sort of our ATM machine. Very low cost of this asset because of that high grade. You're looking at sub $1,200 an ounce. We had some hiccups in Q1 and Q2 of this year. We're back on track in Q3. We will be reporting our earnings later this week on Thursday, but we have press released that August was a record month with the mine doing around 20,000 ounces for the month. So this is the asset that's going to fund our growth at places like Marmato. One of the pushbacks we get at Segovia is the shorter reserve life on paper. It's had a 3 or 4 year reserve life but it's had that reserve life for the last 10 years plus. I think we did a lot of positive work to that unjustified reputation last week when we updated our resources by 100%. So the M&I resource inventory at Segovia is now 3.6 million ounces at 14 grams a ton. So I believe we'll be mining at Segovia for decades yet. That brings us to our next big mine, Marmato. So we're currently mining the Marmato upper mine. It's a small operation, does about 25,000 ounces a year, narrow vein like Segovia, but without the grades of Segovia. But being active at the upper mine allows us to have a presence in the community, start to formalize some of the artisanal mining groups, and just understand the cost framework. We know what it costs for a unit of fuel, a unit of labor, a unit of concrete. But the real reason we're at Marmato is for the lower mine. This is a big, intrusive system, over 8 million ounces in all categories. We got the permit to go and build that asset in July. We broke ground in September, and we intend to start producing in late 2025. When it's up and running, this will be a generational asset, in my opinion. Average production rate will be around 160,000 ounces. It'll do that for 20 years on the reserve life. And if you look at the resources, you could easily envision this being a 30, 40-year operation. And very importantly, just like Segovia, it's a very low-cost asset. So we're looking at all-in sustaining costs of about $1,000 an ounce, and that includes the impact of the stream we have with Wheaton Precious. And so just on the funding, so I think in a nutshell, the reason to buy Aris today is we're going from 200 to 400,000 ounces, and we're going to do that without issuing a single new share. And we can say that with such confidence because the capex number in the recent PFS came in at 280. That's the second PFS that the company has published. And again, we're active on site, so we have a lot of confidence in those numbers. We've already sunk 17 million as of June. We get 120 from Wheaton. That leaves a funding gap of 141 million. That's easily covered from current cash, not to mention ongoing cash flow from Segovia operations. So I think unlike a lot of our peers, we're insulated from the market volatility, and now it's just up to us to execute, put our heads down, and build this mine. It's a simple operation, and we're already on site. So we have a lot of confidence that we're going to execute on Marmato Lower. That brings us to our third asset in Colombia, Soton Norte. This is my personal favorite. I think it's one of the last great Tier 1 assets in the space. Some headline numbers are 12 million ounces in all categories. There's a 2021 bankable feasibility study that showed a production of almost 500,000 ounces at sub $500 an ounce. If you're wondering why those costs are so low, it comes down to grade and geometry. This is a very compact ore body. We plan to mine it at around 7,000 tons a day as of our feasibility study, and you're doing that at a gold equivalent grade of around 9 grams. And when you combine that sort of tonnage with those sort of grades, it just slams the cost profile down. And because the asset is so compact, there's not a lot of ongoing sustaining capital costs. The catch with Soton Norte is that it is not permitted at the moment. We are in the process of filing a new permit application. What's different about Soton Norte versus Segovia and Marmato, where we've already got permits and are moving forward, is that it's in a community that doesn't have a long history of industrial mining. There's a long history of artisanal mining, but it's up in the mountains. It's close to something called the Paramo. The Paramo was redefined earlier this year. It's now confirmed that Soton Norte is not in the Paramo, and so we have to be very careful about our mine plan. And what we're doing here is mining underground. We're crushing underground, so all of the dust, noise, and vibration will be protected, will be contained underground, and we're going to move the processing facility 7 kilometers away from the mine. And most importantly, we are not using cyanide or mercury to recover the gold. So it's a very benign, low-impact way to build a mine. It's a very expensive way to build the mine, but when you have those kind of grades, the project can easily carry it. I would say the market discounts this asset to zero as far as our share price and our NAV goes, but we have a lot of confidence that our artisanal program, our credibility at places like Segovia and Marmato is going to help us get this permitted. And we're already in discussion with local miners who are getting their 40% recoveries, who are unfortunately pushing their tailings into the local drainage system, to work with them to purchase their ore, move it to Segovia, and help clean up the local environment. Sorry, I'm having real trouble with the clicker here today. Okay, our fourth asset is in Guyana. This is a bit of a different beast to our other assets. It is a big open pit, above average grade of around 1.4 grams, but there are 7 million ounces here, and these are advanced ounces. Okay, this is an asset which, if we wanted to, it could be permitted in sort of 6 to 12 months. When we took control of this asset, we reevaluated the resource, which took the contained ounces from around 10 to 7 million ounces, but we believe those are more robust ounces. So what we're doing right now is just checking our math, checking the scope, trying to figure out how this asset should be built. Should it be smaller? Should it be larger? But we don't need to build 2 mines at the same time. Marmato Lower is a wonderful project. We're going to go ahead and build Marmato, and when Marmato is up and running, by then we'll have a great plan for Guyana. We're very constructive on Guyana. English-speaking, booming economy. The GDP grew by 40% last year. I think it's the hottest economy on the planet right now. And the exploration maturity is very low. So a lot of the best discoveries this year are coming out of Guyana. So we're very constructive on this geography. We just need to check our numbers before we dive into this project. So where do we fit in the space? We're already a serious junior producer. We're growing to 400,000 ounces. We've got almost as much gold as El Dorado, but we're at the bottom of the chart in terms of enterprise value. I don't think this is a mistake. I think it's simply because we are really the only listed active gold producer in Colombia. So I think investors struggle with the discount rate. And by permitting mines like Marmato, building mines like Marmato, executing at Soton Norte, generating cash flow, and doing this internally without going to the market, I think we will start to see the discount erode, and we will move up the ranks and sit next to the peers where we should be. Something I'm very proud of is the fact that our management team owns 6% of the stock. As you go through your meetings today, I would challenge you to find a company where the management team owns 40 million plus worth of stock. And that 6% is just directors and management. It doesn't include Frank Giustra, who owns close to another 7 or 8%. Our average cost is over $4 a share. So if you buy the stock today, you're making money before we are. We're starting to institutionalize the story. There has been a bit of churn since we merged with GCM, and we continue to stay out there, market our story, and explain why we're an asymmetric bet on the gold space. I think our board of directors needs no introduction. I would like to flag Monica de Graef. We've added a lot of Colombians to our board. She's a former justice minister of the country, has a lot of respect from the citizens of that country. Additionally, she is a director of Ecopetrol, which is the country's oil producer. So she understands the country. She can help us navigate the politics and make sure that we're bringing our minds on in a socially conscious way. And with that, I think I'm pretty much out of time, so I will throw it to the room.